Welcome back to my channel. My name is Dr. Anwar Youssef Dunbar, and this is Big Discussions 76, my original channel. First of all, please like this video, please share it, and please subscribe to my channel. Well, I'm back with another video here. This one is going to be in the financial space. As I've said, since I've split this channel into 3 others for a total of 4 channels. On this channel, I discuss general topics, current events, thoughts of the day, financial literacy / money, and in some instances, business topics, and just general topics, and in some instances, personal stories. And so this video is going to be a mixture of all of those to some degree. I recently, yesterday, well, at the time I'm taping this, it will have been yesterday, I had Ramil Amyr on my channel. He had me over on his channel. It might have been last week. He had me over there, and I thought it would be cool to have him come over to my channel because Ramil talks about money and business related topics, among other things. So that's one area where our roads intersect or merge, and so I thought it would be cool to have some synergy in that area. And I think some of the viewers liked it because you had 2 guys from, well, we'll say different walks of life, or 2 guys occupying different stations, and we were able to come together and talk about money. And I think that's important because no matter what station you're occupying, you may have a PhD, you may work in the government, you may be an entrepreneur in the real estate game out there hunting, you may be a school teacher, you may be a ditch digger, you may work at a rental car agency, but money is something that impacts all of us, and it affects all of us, and it impacts all of our emotions, and to a large degree our physical and mental well-being. And it's something that we all need to be conscious of. Now, to all of you, I will say this, to all of you Biden-Harris supporters, 10 years from now, who knows what we'll have. I keep hearing about something called the Great Reset, which, if something like that were to happen, it would have financial implications for all of us in terms of our monetary system and everything related to it, our currency, our money, all those things. So 10 years from now, this information may be obsolete, but for now, it's important. So a huge part of financial literacy is having some understanding of real estate and mortgages. And I was in the process of trying to refinance my condo unit here. And what that basically means is you're going for another loan at a lower interest rate. Now, some would say that for a long time it's been discussed and preached that homeownership, securing a mortgage and getting a home, is the American dream. Now you have voices like LJ over at Savings Minus Debt who are not high on mortgages, and there are reasons for that. When you understand the math and when you understand what you're actually signing up for, it does make you think twice. In many instances, you're signing up for a 30-year loan at a fixed interest rate based upon the appraised value of your house. But once you run the numbers and you see the entire amount that you're paying over 30 years, it's a bit of a head scratcher because you're paying much more than that price of the home. But I was I prior to my live stream with Ramil, I sent a email to the mortgage broker I was working with, and by the time the live stream was over, I got an answer about whether or not he was able to get my loan done. And I'm going to finish this video with what he had told me. But I just thought this would be a good time to say something about mortgages, since me and Ramil talked about that. So, during the 2007-2008 housing crisis, I think all of us were exposed to, whether it be directly or through the news, we were exposed to the dangers of mortgages and home loans, and we were exposed to what can go wrong if you don't know what you're doing. There was predatory lending during that time. There were people who signed up for mortgage products that they didn't understand. There were people who bought more house than they could afford. And there were people who bought, as my mentor would say, at the peak, as opposed to buying down in the trough. And so there was a lot of what not to do. ARMs. Those are adjustable rate mortgages. So those can readjust with the market, depending upon what the Federal Reserve decides is a good interest rate at that time. Right now, interest rates are at an all-time low. And for myself, I was trying to refinance so I can get not a much lower interest rate, but a lower interest rate from where I am right now. So those are ARMs, and those are thought to be dangerous, except for a few rare circumstances. Over leveraging, I talked about that with the people who bought too much house or more house than they can afford. If you've read the Millionaire Next Door series, it's either in that first book or it's in one of the subsequent books. I believe it's called Stop Acting Rich and Start Thinking Like a Real Millionaire. I might have messed that title up. But the net of it is, in one of the books, Dr. Thomas Stanley says that one should never purchase a home that's worth more than 3 times of your annual income. So you should sit on that riddle and think about that. If you're going to buy a home, it should never be more than 3 times of what your annual take-home pay is. Another rule I believe he taught in that book was, for a married couple or a common law marriage couple, or 2 people who are dating and who don't want to get married and who want to purchase a home, the mortgage should never have to require both incomes. So if one income goes down, the mortgage should be able to be paid for off of one of the incomes. Those are 2 little secrets there. In terms of qualifying, we know that it helps if you have a competitive credit score. So do you pay your bills on time, and are you not over leveraged? Lenders typically want to see that you are stably employed, and they also want to see, that you're responsible with your earnings, and it also helps that you have an emergency fund and or a large sum of money saved up in an account in case you need it. All of those things show that you're a safe risk. A couple of years ago, I'll just say she was a friend. There was a story in my hometown of Buffalo which was saying that a suburban bank was they were discriminating against black people who wanted to qualify for mortgages, and I I urged my friend, and I told her, having gone through the mortgage process, that there are a couple of things that they're looking for. Credit score is just one of them. The other one is, as I said, your job history and whether or not you have money saved up. It helps to at least put 20% down. I've experienced that firsthand, but from not doing it. And the net of it is that I learned that if you don't put 20% down, then you're going to trigger the mortgage insurance. And the mortgage insurance is not for you, the borrower. It's actually for the lender. It's for them. It's to protect them. And I think that that's probably the underlying theme of this video, is that lenders don't give you mortgages just to make you happy. It has to make sense for them. And that's why, particularly after the 2008 housing crisis, they've become so stringent in lending you the money for your mortgage. I remember when I was living with my father, I wanted to get an investment property where he lived at that time. That's a different story. I'll probably record a video on that or write a blog post and or both. But one of the things he told me was, when you go for a mortgage, the bank is going to want to see everything about your financial history. And that's because the mortgage isn't just something for you, it's something for them as well. And they have to, it's basically a risk assessment. And they basically have to determine if you are a safe risk to lend that money out to. And so I'm going to wrap this up by saying that banks and lenders, they have their own interests. They're not just there to lend the money to you. They are banking on making money off of that loan. Many of them don't want to take over the property if you default on your mortgage. And so again, they have to assess whether or not you are worth the risk. In some instances, those mortgages are tied up into some sort of security, so that someone who is investing in that bank is getting some sort of payoff or some sort of interest payment. Most banks nowadays are businesses all in themselves. And so for anything they do, there's usually a payoff for them somewhere. So during my live stream with Ramil, the lender I was working with, he wrote me back and said, unfortunately, I can't do this loan. And it was very cold, and it was a very impersonal email. I had known this guy for a while. He actually gave me my first mortgage. But I know at this point that it's business, and I know that for whatever reason, they're protecting themselves. My condo association, or my condo complex, we were supposed to be going through something called a redevelopment. But with COVID, that has and probably will impact that project going forward. And in a subsequent video, I might talk about the dangers and all of the moving parts involved in buying a condo unit. I've learned that firsthand as well. So I think there might have been some encumbrances and some issues with my condo complex and its redevelopment that caused them not to give me the loan this time. But I think what I wanted to say in this video was that lenders are not lending you mortgages just for you. It's masked and it's dressed up that, you're purchasing a home, and you are reaching this landmark. But as LJ over at Savings Minus Debt says, you don't necessarily own the home as you're paying off that mortgage, and you don't own it outright until you pay that mortgage off. And as Robert Kiyosaki says in Rich Dad Poor Dad, your house isn't necessarily an asset when you live in it because it's not making money for you. But I just wanted to say that the lenders aren't just here for us. There's something in it for them as well. And if the deal, for whatever reason, doesn't make sense to them, they're not going to do it, and they don't have to do it, even if it's going to help you out. And that could be, even if you have stellar credit, it could be that you have an emergency fund saved up. It could be that you have stable employment that you've been at for the last 10 to 12 years. But if there's something about that deal that they don't like, it could be the neighborhood that you're trying to buy into. It could be that you live in a condo complex. Anything could stop them, and anything could discourage them from doing that deal. It isn't necessarily your skin color, but they won't do it unless it makes sense for them. So I'm going to stop this here. That was a bit of a ramble, but I thought it would be cool to shoot this as me and Ramil just had a stream on financial literacy and money. Again, these are topics that you need to be aware of regardless of who's in the White House. These are topics that you need to be regardless of independent of the station in life that you're in. You could be the janitor, an airline pilot, a medical doctor, a web designer, or a regulatory scientist. In any case, let me know what you think in the comments section below. Please like this video, please share it, and please subscribe to my channel. And as always, remember that your attitude determines your altitude. Take care, and I'll talk to you the next time. Bye-bye.